Hello, welcome to Real Estate Divas. I'm Kristin Gerst with Capricorn Mortgage Investments. I'm here with my lovely co-host, Jerleigh Thompson of Texel Real Estate and
Reformation.
Reformation Brokerages. And today we are talking about where we are a year later in the real estate market with COVID. We did a show.
Like right there, we were even scared to do that show. Luckily we had Ryan that said, no, I'll open up the studio for you guys and y'all come in and do kind of like what's going on in the market. What do you think might happen and what's everybody saying out there? And a year ago, people were saying quite a lot.
Well, we were afraid.
Well, yeah, some people
Well,
were
anybody
afraid,
with half a brain
was afraid. And then there were a lot of people who, kind of, you and I talked about it on the show, talked about how they were, a lot of investors were kind of licking their chops and a little vulture-esque in their approach to this whole thing, thinking that it was going to be a cash cow. And all of a sudden, these foreclosures were just going to plop in their lap.
Not only foreclosures, but then just kind of culling the herd of everybody out there who really they don't know what they're doing because they're paying way too much for these properties. And, when you overpay for properties, the people who actually stand a chance of doing a good job and making money on these real estate investments have no chance to buy them because they're not stupidly going to overpay for them.
Yeah, but also for the ones that kind of, to speak to the culling of the herd thing, is, you've got nothing against the newbies out there. We always welcome the newbies.
We were newbies one day. One day ourselves.
And that's what part of this show is for new people and stuff. But if you didn't have those systems in place, you weren't checking your numbers, and you didn't have a crew you could trust, and that would expedite things in a timely manner, and it was taking you 4 months to flip a house, you would not survive this last year, and you probably haven't. You've probably moved on.
So I did a couple rehabs this past year.
Yep.
And what I saw, especially, second pass, summer, starting in June, going all the way to October, what I saw was lack of supplies. Appliances. I couldn't get appliances this year. I would normally take me a week to get something installed. Some days I could get it installed next day or 3 days from Home Depot or Lowe's or Best Buy or wherever. It was taking me 2 or 3 months because they just didn't have the appliance at the warehouse and they didn't know when they were going to get it in.
Yeah, because all shipping stopped.
Yes.
People weren't shipping, or if they were shipping, then it was sitting in the docks. Everything shut down, and then supply. The demand is still there for building supplies, but now the building supplies, there's a shortage, so there go the prices. So not only are you paying more for the properties because there are less and less out there, but then you're paying more for the supplies.
Correct. So,
and you're waiting longer for those to show up.
And yesterday I just bought a brand new dishwasher for a property, and it's a higher end property, right? It's an Airbnb, right? So I'm not going for super high end, but it can't be low end either.
Yeah.
A year ago, pre-COVID, I would have paid $500 for this dishwasher. Same dishwasher, $750.
Oh yeah, yeah.
And so everything's gone up probably in price 50%.
It's significant, and that goes the same for the properties out there. Anybody who is in the Texas market, any of the hot markets, really and truly, which is all pretty much metropolitan areas or areas that have, like I was talking to a guy from Florida that called because of the Divorce Leads show, and I was talking to him for quite some time, and he goes, my clients can't buy anything. We don't have the inventory, and that's the ongoing problem right now.
If it's priced right.
Yeah, well, even if it's priced wrong, you can be priced over and still get 5 offers with $10,000 over. I mean, people are bidding over, and what used to be, you're going to get a few offers or whatever, and it's been a hot market for a while. It's been a seller market for quite some time, but not like this. This is crazy.
Yeah. So how long is it going to continue? A lot of people want to know that. I'm saying as long as they are artificially stimulating our economy and pumping money into it, I mean, basically, people see this, oh, I'm going to get a check, right, from the the recent $1.9 trillion. It's not really, it's more of a recovery. It's an aid. It's an emergency aid to people.
Aid.
But really what that does is just the government printing money. And a lot of money.
And it stalls things out. You like pretty much, I mean, because you and I have these conversations on a regular basis. If it's not having a conversation with a colleague where we're just kind of talking about the situation and what's going on with real estate, we're also being turned to as, hey, can you tell me what's going on? And nobody has that crystal ball, but you're right. I mean, as long as the federal government is not allowing the foreclosures, that memorandum is still, in place, and they can defer those payments. And if you don't have a job and you can't get a job in your industry, I mean, obviously it's needed. It's needed, but there's no reason to leave. That's part of the reason for the housing shortage. Right. I mean, why sell my house even though I could get top dollar, but then where am I going to move?
And you can't find any place to live.
Yeah.
I'm currently in that predicament.
Yep.
I can't find anything.
Well,
that I want to buy that's not seriously weird or jacked up floor plans or, I'm like, God, I don't want to buy a problem.
Or if you find something that you like I had a buyer fly into town this last week, and we saw a lot of homes. And she ended up liking several of them, but we knew that we were going to have to bid over because every single one of them, multiple offers within 2 days. And we knew we were going to have to bid, when you're talking about a lower, price point anything lower than $300,000, then you're going to bid over somewhere around, in our area, somewhere around $5,000 to $15,000.
Wow.
Now, if you're going, the higher you go, then the more you got to bid up. And then you have to guarantee a certain amount that you're willing to come out of pocket if it doesn't appraise. Because they want it, all the agents know, I mean, if you're a decent agent, you know that if you list that house and it's at the tippity top of the comps, whereas we used to be able to go 3 months back, I give you comps, they last for at least 3 months, right? Not now. I mean, now I'm like checking every week. What has sold and what did it sell for? I mean, because it's moving that quickly. So
the prices are going up.
The
and
prices,
up and up.
Yeah, and because it's become such a bidding war with the housing shortage. So we've got, somebody.
But just because they do that, they still need to get to the table, go through appraisal, see how much money they need to bring to the table. So I'm watching quite a few fall out of contract because even though they agreed to pay that, it didn't appraise there.
Yep.
And then
which is why a lot of the agents, if they're accepting, like if you're in the $600,000 range, then most likely if it's a bidding war, we're talking about $50,000. I had talked to an agent of mine 2 days ago, and she said literally that one of the houses she bid on, they went $100,000 over. 100,000.
Like because how long? Like we want it.
How long is it going to take you to recoup that? Because obviously this won't last.
I just think that's insane. Because more likely than not, we are at the top of the market right now.
Yeah.
And it's going to go down. Or at least stall. And so what happened back, and I can remember saying the same thing, and I've heard this from countless investors, economists in Texas go, well, it's not going to happen to Texas.
Well, we hear that a lot.
And I said the same thing back in summer of 2007. I'm like, well, it's going to hit California. It's going to hit Florida and New York. And it's going to hit Nevada. It's going to hit Las Vegas because they're different than we are. Mm-hmm. And lo and behold, it was hitting them then. A year later, Texas was in the thick of it. You couldn't get financing, and it's not going to be, yes, we have jobs. Yes, we can have people who can afford these mortgages, but all of a sudden you're going to need an 800 credit score and tons of money and a very, a 15 or 20% DTI. And it's going to get back to the point where only 10 to 15% of Americans can qualify for a mortgage.
Yep.
Then throw in the domino effect of the moratorium ending and all of the backlog of foreclosures hitting the market at even within a 3 to 6 month period.
Well, and I bet there's going to be a little bit of stall out even with, once the moratorium is lifted, I bet there's going to be a stall out there as far as how quickly they're going to move on that. Like there may be something that, we're going to lift it, but it's got to, it's got to take longer to foreclose.
That's correct. But there'll be two schools of thought.
Yep.
One, you're going to have the banks who go, all right, we need to get this stuff off of our books super fast because it's a hot market.
Yep.
So let's foreclose now, get them to sell, get the best price we can for it now. Or they're going to go, hey, let's go ahead and wait. We can work with these people a little bit. Let's see how it pans out. And then we can put it on the market 3, 4, 5 months down the road.
Well, and I wasn't even talking about like the banks themselves, the mortgage holders. I was talking more of, I wouldn't be surprised to see something from the government that says, okay, we're going to need this to be, well, one, there's going to be such a backlog in our court systems because there already is. Because, they're still doing virtual court.
So foreclosures are down. In the month of February, foreclosures are down 77% from a year ago.
Yep.
Which just tells you, yes. And there were a lot of banks that threaten foreclosure, but to actually do it, they've got to wait really until June or July. They're finding some ways to foreclose, obviously. I think North Texas did 14.
Wow.
14 this month.
Yep.
Total.
Well, and to
For
look
the month
back,
of March, 14.
To look back and remember again all the know-it-alls, the gurus, the people that we haven't heard really a peep out. The ones that know what they're doing are still out there and they're still talking and they're still doing business and they're still flipping homes but they had a system but you know what I'm talking about. The ones that have done 4 deals and now they're claiming, pay me, I'm an expert.
The guys on
Clubhouse. The guys on Clubhouse. Didn't we have this conversation?
I think so.
Have those guys even done 4 deals? Haven't they done like a deal?
I don't know.
I don't know either.
The crazy thing is you can always, I love all the realtors who are just coming online in the last, month, 6 months, 12 months, because they're like, okay, I need a career, so I'm going to be a realtor. Right now, if you can get a listing, if you can find a buyer for anything, show them some houses, you're going to make money. But come 6 months from now, honestly, I think it's going to take getting majority of Americans vaccinated. Because as soon as that happens, okay, well, we're all safe. We're completely 100% opened up. Everybody can go back to school. Teachers are vaccinated and, they're saying next fall, kids will be vaccinated.
Yep.
So after that point comes September and they stop pumping money artificially into the
memorandums until
July. June, July.
Are you I thought it was September. I thought it was.
I didn't hear it get extended, but
well,
it might be. I don't know.
But the point is that, this is going on. This is definitely going on for a minute.
Hi, Michael.
Hey, Michael. Thanks for joining us. Thanks for tuning in.
He's in Arizona.
Oh, yeah?
Yeah.
How's it in Arizona? About the same?
Probably, right?
Well, it's been really interesting, obviously.
Even if that all comes out, as soon as everybody's vaccinated and they stop putting money into the economy, at some point they're going to stop doing this.
Yes.
And the Fed will stop just buying up every single bond that they possibly can. They're buying mortgage-backed securities like crazy.
Well, to go back to your point about saying that it won't hit Texas, right? Because there are still a lot of people out there. I talked to one, I forget how many weeks ago. Not that I value their opinion highly, but we did have the discussion. But he was one of the, he had the train of thought of it won't hit Texas. We're affordable. We've got jobs. We've got this. We've got that. And so it won't hit Texas. And I said, that's what everybody said last time. It hits Texas. It's just we usually see it coming first. We get to see it happen on either coast first. And hopefully prepare, get your ducks in order.
I just want to jump in on this because earlier talked about where we're at, whatnot. But like, I've been hearing of the crash since 2013.
This would be an excellent point.
Every single month or year, it's coming, it's coming, it's coming, it's coming.
That's true.
And it's literally, and y'all know my history, but 2013, that's what, 8 years straight
of it being a seller market.
Industry leaders, experts saying that
it's coming.
The market's crashing. So, and again, I'm not as smart as those people, but what from my take is like if Corona didn't crash the real estate market.
So the guy.
Okay, but that's.
I don't know where I'm going with this. I'm just saying it's like I think industry experts have no clue what's going on.
No, I agree. I will agree with that. But at the same time, when it comes to when we're talking about the speculation, everybody, you're either going to be wrong or you're going to be right, right? You're a 50-50. But to say that Corona did not make the real estate industry crash, that's we're not through it. We're surviving right now because we have that cush. And when that cush is no longer there, then we'll discover if Corona crashed.
Until I see a movie about it, there's no crash.
Well,
until there's a Netflix series.
Speaking about movies, the main character in The Big Short, the Batman guy,
Michael Bloom.
Yes.
The actual guy or Christian Bale?
No, not Christian Bale. The actual guy.
Michael
Bloom. He started shorting. And the guy, he started shorting mortgage-backed securities again, along with the Brad Pitt guy out of Colorado.
Oh, yeah.
So, hey, you know what? The real guys, they've started shorting those things again. And I don't think anybody denies that we are going to run into issues, which is why you're seeing interest rates rise. Yeah. Because that means fewer mortgage-backed securities are being, before we had low interest rates, super low interest rates to, when you walked into your Bank of America, because they could sell that low interest rate to investors.
Exactly.
In mortgage-backed securities. Well, now they're like, there's a lot more risk. We don't want to invest in that low interest mortgage-backed security, so you're seeing interest rates creep up.
Yep.
Even though the Fed is still lending money at 0%. So again, it has nothing to do with what the Fed is lending at. It has to do with where investors think or how risky they think mortgage-backed securities are going to be. And when you start seeing interest rates rise, that means confidence in the real estate market is down.
Going down.
Another fascinating thing is several people I know that I respect in the real estate world are like, Bitcoin, Bitcoin, Bitcoin. Bitcoin, Bitcoin, Bitcoin. And I'm like, where the hell did this come from?
Yeah. Well, okay, so Bitcoin, though, is an excellent point to look at what's going on in the market, because that's what was some ridiculous number, like 56% of people took their stimulus checks through the first round and put it into the stock market. Mm-hmm. That is why you saw this run, like millennials. What are millennials going to do with it?
Yep.
They don't have kids, they don't have families. They're not trying to put food on the table or, buy clothes. Mm-hmm. So they went and they put it into GameStop and ran GameStop all the way up.
That one was pretty.
But that is, people have been trying to figure out what has been going on, in the stock market this past year. Other than it, crashing severely in March when we went on lockdown. Mm-hmm. After that point, government started pumping money artificially into the economy. And we just keep going up and up and up. And companies, as long as they hear they're going to keep putting money into the company or into the economy, things will stay up. What happens after that's done?
Well, and that's the whole thing is whenever we did this show a year ago and we were trying to kind of wrap our heads around what's coming, I mean, what nobody knows what's coming because this is unprecedented. I mean, whereas some people are like, okay, well, it's time for a recession because of this, or there's certain economic trends that they're paying attention to, and this is the way things are going. But because of the way this all went down, it's
weird. I mean, what typically happens when you when you print money like that, we have higher inflation.
Yep.
Which means just the cost of everything you want to buy is going to be a lot more expensive. But if we also couple that with high unemployment, that means that people are going to be working for less, for longer hours. Mm-hmm. And so there's going to be a large percentage of the population that everything for them in life is more expensive and they are making less money.
Yep.
Than they were before. And apparently, 10 million, whatever it is, unemployed, that's just a drop. Apparently there's a lot of people who have fallen out of, they can't get unemployment benefits anymore.
Yeah, they can't get unemployment benefits
so they're
anymore.
No longer included
in that number.
And they're still not making any money.
Yep.
Word.
We're not laughing at you. We're with you. We love you.
No, it's so that's going to, I mean, it's going to be very interesting just because we've never had this happen before in history.
Yeah, it's, well, and, not to be insensitive, it's not.
No, there are some people who are going to be hitting some pretty hard times.
Yeah, it's going to be interesting for sure. But, I mean, it's still, for now, we've got at least, I would say at least, I know 6 months is when things start to, because of the vaccination and some other things going on, that things will start to ease up. But it always takes a little bit longer that's something I will definitely agree with as far as Texas is concerned. It takes a little bit longer here. It takes a little bit longer for it to hit us because we don't have the same inflation rate or the same over appreciation rates that either coast has, although I would say in the last 3 months we're trying to catch up. I'm like, what in the heck is going on here? But I have an agent that just closed. He sold the house, a new build, and it wasn't finished yet. He sold the house a month and a half ago, like pre-sold, and it's closing, and he was like, oh, I'm so mad I pre-sold that house. I'm leaving $20,000 on the table if I had just listed it now. I mean, it really is crazy to me that in 17 years I've never seen this. I mean, I don't know that anybody else has seen it even prior to that, but the jump in things in what I always have considered the Dallas-Fort Worth and Texas in general pretty moderate.
For the immediate, and you're on the retail side. I mean, and there's a lot of investors out there watching this who are considering flipping a house. For the next spring sales, they're going to be strong.
I totally agree. I mean, we're still moving in that direction. We still, like you said, have that money pumped into.
As long as we're doing that, he's got I think there's another, $2 million package coming on the heels of this one.
Yep.
So as long as money keeps getting pumped into the economy like this.
Yep. Well, I mean, I definitely feel like this spring and this summer, it will retain the hot seller's market, so if you want to pay the high price and take the risk and try to flip it, because I mean, even these shacks, the shacks that I could buy $50,000 a year ago.
The question is, how much do you want to overpay for something? And right now, I got to tell you, I don't.
Yeah, I'm kind of with you on that. Well, I mean, you and I have both talked about like the seller financing. Love that.
I love it too.
Yep.
And I'm preparing and rolling out a new product for at Capricorn in anticipation that in the next 6 to 12 months, owner finance is going to become the number one game again. Like how it was back in 2008, 2009, and 2010.
Well, and explain why that is. I mean, part of that, because they're making, once the inflation hits and the interest rates rise, it makes it harder.
It makes it harder to buy a house, but owner finance interest rates have always remained around 9 or 10%. Mm-hmm. Yes, you're going to pay a higher monthly payment, but rents are also skyrocketing everywhere. So, you're still getting in at a pretty good deal.
Well, and they're going to not only, with the financing and stuff, whenever this happens, like it did in 2008 and 9 and everything, and they start tightening how they're lending money, mortgage lenders start tightening how they lend money, less people qualify. And so the less people that qualify but need a home, want a home, then...
Yeah, owner financing is the solution, seller financing.
Exactly.
And to get those houses done, the amount of times, yes, depending on when that person buys the house, but let's say it's somebody who overpaid in the last 12 months by $100,000, is all of a sudden going to find themselves underwater. And there's a lot of buyer's remorse from a year ago when COVID hit and quarantine hit and people were like, I need a house and it needs to be different. And all of a sudden they find themselves living out in the country somewhere and they're like, why did I do this?
Yep.
That's going to end and people are going to be like, okay, I got to get out of here.
Yeah.
I'm sad that I overpaid for this, but I just want to sell it.
Well, and not only that, either I'm sad I overpaid for it or something's happened and I overpaid.
And I have to.
I have to.
Well, and always remember that it costs roughly 10% to sell a house. And if you overpaid by 10% and now the property is worth even less, you might be coming to the table with 30% just to get out of it. And not everybody has that kind of cash.
No.
I mean, if you got to write, you've got a $200,000 house and to sell it just to get out from under it, you got to write
You're going to lose. Yeah, you got to come to the table with money.
With $60,000 just to sell it.
Yep.
Okay, what are you going to do for your down payment? Where are you going to move?
Exactly.
So
exactly.
That's kind of how that domino effect starts. As soon as credit tightens up, makes it hard to go buy a new house or even refinance your existing.
Refinance your existing.
That's what we're gonna like right now. Mortgage brokers are like, it's the best year of my life, right? They have loved 2020 because of all the refinances. Well, now interest rates are on the rise. Mm-hmm. That means refinancing is done. It's over. And if we don't have a ton of new construction, rehabs, just inventory on the market, they're not writing a bunch of mortgages anymore.
Yep.
And that will continue to go down.
Well, and that also goes the same for, like you mentioned earlier, when it comes to realtors out there. I've told every single one of my realtors, they're like, this has been a great year. I mean, we were essential workers. We've been working solid. I mean, that first month and a half, 2 months, that was definitely lockdown chill time. I was still kind of working, but I mean, people that had their house listed took it off. Buyers that were looking weren't looking. I mean, that was really kind of shut down. But once that eased up, I mean, we've been every person I know in real estate has been freaking busy. Solid. And for the ones that haven't been in the industry as long, I have told each and every one of them, just put it away. You're like, seriously, put it away. This will not go on forever.
Save your money.
Yeah. Or look at other opportunities as well, like the owner financing that we've talked about. And then we've noticed a lot of people, because of Corona and not being able to evict people for such a long time, there are a lot of investors that lost their butt with the rental properties or with the Airbnbs at the very beginning.
Oh, God,
that didn't pivot in time. I mean, you ended up...
I pivoted.
Yeah, you ended up good.
I saw what was going on the coast, and I'm like, oh, that's coming here. I'm like, what am I going to do?
Yeah.
And I'm like, okay, what does this mean? I'm like, okay, demand's demand's going to be down, supply's going to be way up. I'm like, okay, that means decrease your prices.
Yeah.
And so I was one of the first to do that. And I just slashed them.
Yeah.
So that I remained full.
Well,
Throughout quarantine. But yeah, if you didn't do that and all of a sudden you're sitting there
with all this inventory and zero money coming in. Yeah.
Yeah, it's pretty bad. Or if you were just, I'm pretty diversified in my Airbnb holdings so that, I could change it up. And I also got into traveling nurses, which has been
that was
booming,
awesome.
booming
That was a booming business.
That was the luck.
Yeah.
Since I got into that like 6 months before COVID even hit.
Yeah.
I already had it set up, and that was complete luck. But yeah, I'm very, very thankful for that one.
Well, I think that we have a better grasp. Obviously, when it first hit a year ago, we were sitting here going, "What is going on?" We weren't even sure if we could come in here and sit with Ryan, talk to each other. How far away do we need to sit? Who did you come in contact with today? And not that those precautions weren't necessary, but now that, the vaccinations or you've gotten the antibodies and they're still in your system or whatever the case may be, and just being, what now?
What?
Oh, please. Please. I think I just heard you.
What I said was, now that Trump is not president, life can go back to normal.
Okay, whatever.
Because I'm Trump's #1 fan.
No.
And voted for him 17 times.
Yeah, 17 times.
Yes.
Yeah.
No politics.
Yes, no politics. I know you didn't vote. But it's crazy to me. I could only watch a snippet of the show from last year. We were having technical difficulties and I couldn't get all of it and kind of see what all we were touching on last year this time. But it's weird, to look back and look at, what we didn't know and then
we still don't know.
And what we still don't know, but how different this year was.
It went completely, it was a 180 from where I thought it was going to go.
Yeah.
Because it really was, for me, it's one of the best years I ever had.
Oh, yeah. Yeah. Like
business-wise, financially,
I thought
it was
literally great. That the moment that it hit, I was like, all right, I'm putting all my eggs in the construction business. Like I'm going all in on Jimco roofing and construction. That's what I'm doing. And the brokerage can kind of be my side gig. And
nope.
Yeah.
Again, I think my prediction is still the same.
It is. It's just taking longer. And
it's taking longer. And I think we're going to see, the real estate market in San Francisco is awful. I mean, they've got coronavirus, fine. They've got a mass exodus of people out of that city. And then they have the homeless population, which is completely just crippling that place.
Yep.
And their experts are saying it's going to be a decade to get San Francisco back to where it was. And then you've got New York City. That's apparently the crime down there is crazy, and there's just people have not returned yet.
Yep.
And it's a ghost town and it's dark, so it's sad. That's going to change. I mean, obviously it's going to get better. How fast can people hold on to their holdings? Can people, really the commercial real estate?
Well, commercial real estate's going to be interesting. You and I have talked about that multiple times, and then we talked with Pam a good while about it. But
there's already opportunity in commercial. It's shocking to me now, just driving down the street, and there was a company that, there was a small business that was in business. I know it was in business 2 weeks ago.
Yep.
And then it's shuttered, and there's signs down and it's completely scraped. And you're like, wow.
Well, and Ryan and I were just talking about this yesterday, between the retail and the office space, that a lot of the commercial holding companies, all these commercial owners are not adjusting their price accordingly. They're still asking top dollar for a completely vacant retail strip or a 80% occupancy in an office building. These are adjustments that are going to have to get made because a lot of that's never coming back because of the adjustments that were forced during Corona for all this, remote work.
$30 square foot triple net for a shell.
For a shell that is completely empty.
And it's crap.
Yeah.
But it backs up to Katy Trail.
Yep.
I know which one it is.
2155?
I love it.
I love that building.
I love it too.
But the reality is you go in the parking lot, you're probably going to get shot for a $30 triple net, which means it's probably closer to $38.40.
Yep.
And I don't think that includes a build out either.
No, probably. I mean, that would be something you'd got to negotiate
needs
out.
a build out.
Yeah.
I mean, it looks like it needs to be torn down, actually.
Well,
Makes it awesome.
Right?
Well, I mean, that right there, that's one of those things that is, it takes commercial a little longer to pivot.
Well, because most of those places are on 5-year leases, correct?
Yeah.
So their tenants are on 5-year leases. You've got to figure if somebody signed a lease like February of 2020, they got 5 years to go through that. But if they bankrupt,
if they default, you can try to get your money. You can try to get your money,
Right.
but it's that whole saying of trying to get a blood.
well, that
from a
LLC is now
turnip or
closed
whatever.
down, or that
Yeah.
that corporation no longer exists. So good luck getting paid
Exactly.
for that commercial lease. And I'm sure people are going to try to keep, as long as they're getting bailout money from the government, they are going to try to keep that up and hopefully kick the can down
the road a little bit
to keep their business intact.
I mean, I do think a lot of people will start to move back into those spaces, people that were, but
Not
you think about
not
at the
anywhere,
same capacity.
not anywhere
like,
near that.
What is it? General Motors in Arlington. I can't tell you how many actual properties, large properties that they own, their whole finance department. That parking lot is empty, and we're talking about a building, larger than a couple of Costco's put together, that are all office buildings for their different finance departments and things like that. Empty. They're not keeping that.
I have a lot of friends in the corporate world. They're not going back.
Yeah.
Until, I hear anything from July to September that they're just not going back to their office until then. And that's the earliest they can go back. And I think once you've been doing this a year and a half and they're finding, people are productive, they're getting their stuff done.
Yeah.
And then you can do maybe they're going to do flex days for a little while, do 3 days at the office, 2 days at home, and
But
switch.
if you can cut that expense in half,
why wouldn't you?
yeah.
And businesses are going to see that. They're like, why do we have all this? And just think about what they're not spending on utilities, having all of that off.
What are you trying to say over there?
What I was going to say is I've actually heard, because I would think exactly what you're saying, less commercial space, less usage, but I've also heard the opposite, which is, well, now that we know people need to be spread out a bit more, maybe we get more space.
All right, I heard that. I heard that 9 months ago, and it was on an interview on CNBC, and the CNBC correspondents actually started laughing. Because, yes, I hear that it's always a commercial broker who says something like that. Going, oh, yeah, I've been asked because they want to rent twice as much space now because they all have to be 6 feet apart. No, I don't think so. I don't think a company is all of a sudden going to...
If you can still see the same productivity and not have that space or cut that space in half and do flex days or somebody's at home, then there's literally no purpose. There's no purpose.
Even if, let's say that, a third of companies out there decided to double their footprint out there, which I think is ridiculous. But let's say that happens. You're still going to have half the businesses out there do away with it all,
Yeah.
It's all going to, even out. You're still going to have less.
I don't see how you wouldn't. And we've talked about and talked about with Pam for a while, whenever she was doing her Zoom call or.
Well, and she's brilliant enough. She's an investor herself. She's not only, she and her husband are brokers, but then she's also an investor herself, and she knows a good deal.
Yeah.
I mean, she's got to be, I know they're not out there yet, or, she's still able to find a great deal in an up market.
Well, and she even started at the beginning of this, and she didn't have, they had a flex space, they had a office, building that they had just finished out, and she's like, I got to pivot because this isn't gonna work during this time, and that I respect her opinion. Anyway, it'll be interesting to watch all of this kind of continue to play out, and I'm glad we decided to do kind of a market update on what's going on, what I'm seeing, what's your. Me from the retail side, you from the mortgage sides, and then also just from the investor side of things, like what's out there, what's going on. If you guys have any opinions or want to share some of your experiences, then please, please, please drop those in the comment. We'd love to talk about it. It's always great to hear from other parts of the country. Like I said, spoke with a gentleman yesterday about the divorce leads. That was a big one. But he's out of Florida. But just to hear what's going on in his region and what's going on, and he's experiencing in different parts of the country, it's nice to hear from you guys. But if y'all have any questions or would like to subscribe, we'd love that. We're growing this.
Yes, please subscribe.
Yeah, we're growing the Divas
like,
channel.
comment, share.
Yeah. And I'm Jerleigh Thompson with Texel Real Estate and Real Estate Reformation.
And I'm Kristin Gerst with Capricorn Mortgage Investments.
And tune in next time, you guys. Thanks for joining us.
That was a quick out. Wasn't ready for that.
Sorry.